Hello everybody and welcome to today's video where I want to cover the beauty stocks. And the other title of this video is surprisingly cheap. And I'm pleasantly surprised, and it's a space that I have typically not studied because ELF and Oddity are both, almost 99% women, targeted to women, and Inmode is maybe 70 to 80% women, and so they don't come across, my field of vision, they don't come in my world, but many in the comment section have told me you should look into them, and I am looking into them, and I am loving those. So really briefly, these are the valuations right here in my spreadsheet. So you'll notice a few things that are different. Before I show those different things, let me show you what is the same is enterprise value over gross profit over revenue growth. This metric is me asking, how much am I paying? How much am I paying for each 1 percentage point of next 12-month growth? And based on this metric, the cheapest stock, and that's my favorite metric, by the way, the cheapest stock is ELF. With ELF, I am paying very little for that future growth. And the most expensive stock is the stock that I'm not analyzing, is L'Oreal. L'Oreal is a very expensive, only predicted to grow 10%. And so you're paying up quite a bit for that future growth because it's already the most expensive stock, regardless of growth, right? On an enterprise value to revenue or enterprise value to gross profit. It's already the most expensive stock, but if you adjust that to how much am I paying for that growth, you're paying quite a bit for the growth. The reason why I put L'Oreal in there is because that's the competitor, right? That's the mammoth, the elephant in the room that ELF and Oddity are competing against. They're competing against L'Oreal, and when I see the numbers for L'Oreal, I definitely don't want to buy L'Oreal. It's a giant that is losing market share. Now, what else is new in the spreadsheet? Well, the first thing that is new is I have added enterprise value over revenue just as a reference, and in general I want to pay as little as I can, right, for that. And so in that case, Inmode would be the cheapest, and the second cheapest would be Health. Noting that these are pretty low. These are pretty low for EV over revenue. Kind of my reference here for growth stock is Tesla. Tesla is a 7-ish enterprise value over revenue. If you were to look at a SaaS company, for example, well, it's not uncommon to have SaaS businesses traded at 15 enterprise value to revenue. So these are pretty cheap EV to revenue. And what I've added is that I took something from the playbook of SaaS, and I can do that on these companies because all these companies are GAAP profitable. So because they're GAAP profitable, I can take their EBITDA margin, and if you follow the channel, you know that I typically use EBITDA as a proxy for free cash flow. I much prefer EBITDA over free cash flow. Free cash flow is subject to different fluctuations with different accruals in the balance sheet. EBITDA, I find, is the best proxy for free cash flow. So the whole idea of revenue growth plus EBITDA margin is kind of stealing the learnings that we got from SaaS. In SaaS, when you have rule of 40, rule of 60, and we consider a good SaaS stock to be a rule of 40 stock, i.e., revenue growth plus EBITDA margin should be more than 40. Well, I'm trying to apply this to these stocks, which have a quote-unquote free cash flow margin or EBITDA margin of 20%, 20%, and 41% for Inmode. Inmode is the profitable company right there. And if you add those up, you also find that the most compelling buy and the most compelling company right now is ELF. ELF is the cheapest per my favorite metric, and it is also the cheapest because it achieves a rule of 60. A rule of 60 is quite impressive if you ask me. And if you like past performance, and if you like to look at momentum, this is the chart of ELF Beauty. ELF Beauty plus 1,000% in 5 years, plus 1,000%. That's outstanding. That's a great return, and I'll talk about this in a minute. Inmode has doubled. You can't see it on this chart, but it's about doubled in a 3-year period. This is actually 3 years. It doesn't go back 3 years and a half to 4 years. And Oddity is like right in the middle of its trading range, right? So it's traded more. It's traded 50% above, and it's traded 50% under. And Oddity is kind of in the middle. And Oddity is a very complicated company to understand, in my view. I'll try to explain Oddity in simple ways, but it's I don't pretend to understand them all. All of these companies, by the way, are candidates for a full deep dive for me. They are candidates for a full deep dive because they fit the valuation, they fit the growth, assuming that Inmode returns to growth. They will fit the growth and they are profitable. So they're candidates for a deep dive. Okay, let me begin with ELF. So ELF stands for eye, lip, face, and actually every eye, lip, face. I think that's what I know that's what it stands for. So Health Beauty. Let's talk about Health Beauty a second. I started listening to the conference call of Health Beauty, and I was just impressed. Very impressive conference call. I think this company has a lot going for it, and a lot of reason, like I said, don't look at it because 98% of channel is male, and we don't notice that stuff, right? Because we typically don't buy makeup. So let me tell you about ELF. Let me tell you about health, though. ELF is very interesting. When you look at 5-year revenue growth, you can see it's up 1,000%. Might be scary, right? But if you look at the revenue, the revenue growth has done a 3x. So technically, if you adjust for revenue, technically you're just at a 3x. So the stock is technically 3x on a valuation adjusted basis, right? Because 3 by 3 equals 9, so almost a 10x. So I would look at this growth. I would not interpret this as this stock is 1,000% more expensive than when it went public. I would look at it as this stock is about 3-ish times more expensive as when it went public. But remember, look at these numbers. It is still the cheapest, right? The cheapest stock in my universe per my metric compared to the growth. It is still the cheapest, and it is still the second the second cheapest. Still the second cheapest in even EV over revenue compared to, say, Inmode. So this is still an inexpensive stock that has quite a bit of room left to run, in my opinion. What's interesting about health? There's a lot of things that are interesting about ELF. One of them is, and they have an outstanding investor presentation. I highly recommend it. I was almost entertained by this presentation. I really liked the presentation that they gave on the earnings call, and every sentence I was learning something because it's an entirely different industry and I know nothing about this industry. So I like to have a conference call where I learn stuff. Anyways, the share growth, their market share, they're the only brand that's growing market share right now, and you can see they're taking market share from giants, including L'Oreal, including Maybelline. So these are, of course, brands that we all know, but they're taking market share from them. Why are they taking market share? Well, there's a lot of reasons. One of the reasons why they're taking market share is that I find them to be a low-cost leader. They seem to be very cheap. They seem to compare, they'll compare some of their, I don't even know what that's called. Is that a mascara? They'll compare like a mascara, and they'll say, mascara $7, and then they'll show you the mascara from L'Oreal, and the mascara for L'Oreal is going to be something like $30 or $40. So very cheap. They are a low-cost leader. They also claim to be the best product out there because of color matching and the colors that they offer. And apparently, color is a big deal in makeup, and the colors that they offer really match the complexion the best. And so that's one of the ways they do it. Noting that the analysts are saying they will grow 41%. That's what the analysts are saying. But when I look at the guide, and they're in the middle of that guide, but when I look at that guide, they've guided plus 56%, plus 55 to 57%. So I take the middle, plus 56% is what they've guided in terms of revenue growth. So even analysts don't believe they're going to reach their lofty targets in terms of revenue growth. Conference call was absolutely outstanding. From what I understand, this is a company who early on really benefited from their partnership with Target and being sold at Target, and they actually 20% of the cosmetics sold at Target are now ELF, which is interesting for a brand which is not a mainstream brand, right? It's not like L'Oreal. And what else is fascinating? Well, among teens, so they do survey of teenagers. I assume it's 13 to 19. I assume among teens, they are the number one cosmetics brand among teens for the fourth consecutive year. And guess what? Why do we care about teenagers? Well, we care about that because then they become Gen Z, and then they get a job, and then they buy more makeup, and when they buy more makeup, they're gonna use the brand that they've gotten accustomed to in their teenage years. So that's, we invest for where the puck is going, right? We invest for the next 10 years. I don't really care that L'Oreal is number one among 50, 60, 70-year-olds. That's not very important to me because that's not where the growth is. The growth is among the youth, the next cohort of customers. So I love to see that. They're also the number one cosmetic brands for Gen Z, right? So people under 25, that's their number one cosmetics brand. So again, they're going to get into their earning years, going to be making more money and buying Gen Z. Another thing that I love very much about e.l.f. is that they are the only major brand. So depends how you define major brand. Because I think it's borderline whether you would consider e.l.f. a major cosmetics brand or not. Maybe they're right on the edge of becoming a major brand. But anyways, it's the only main brand that has about 20% of their business, which is direct to consumer, a little less than 20%. I think CEO said something like 18 or 17%. That's direct to consumer. And of course, why do we care about that? Because you make much more money when you go direct to consumer. So they have women simply going on their website and ordering on elf.com and getting it delivered at home. I love this much more than selling it into a store. That's much better, right? You make much greater margin. And obviously you can understand why a company like L'Oreal or Maybelline or Revlon can't really do that, because they would jeopardize their retail partners, and their retail partners would be very unhappy to see L'Oreal competing directly with them selling online. So it seems to me like it is a company competing against sleeping giants, and with a lot of market share up for the taking. And I find this company very interesting, and it's definitely a candidate for a full analysis for me, and even maybe an investment. I'm quite interested in this one. Let me move on to Oddity. So Oddity is a complicated business to understand. I will put it in the same category as an e.l.f. in the sense that it operates for now in the cosmetics space and in the health space. Much of their business, to my understanding, comes from this brand called MAKIAGE. MAKIAGE right here is the brand. It's a very popular brand on social media, once again, per my understanding. And Oddity claims to be a direct, so it's a direct-to-consumer brand that's mostly AI and data-driven. And they use AI and data to make compelling products, one-to-one products, that people are more likely to buy. And they do that either through questionnaires or through scanning. So to give you an example of the MAKIAGE brand, which is a foundation, is that what it's called? It's a foundation. So what it does is they'll have their app, right? And you do the app, and you scan your face. And based on the scanning of your face, it will give you the perfect foundation with the perfect color, right? The perfect color that corresponds to your skin. And again, going back to e.l.f., and it's all about the color, and it's all about matching the right color. Well, e.l.f. claims to have the best colors. Well, if you go on the Oddity and you read the Oddity calls, they talk about colors, and it's all about color matching and having the right color. And of course, we understand that intuitively, because there are 16 million different colors possible or something like that. So I would understand this intuitively, but the whole idea, why is this product doing well, is because, well, you scan your face and then you get a custom foundation just for you, and that's why it's, that's the product right there, and that's why they claim to be this data-driven, direct-to-consumer company. I can't claim that I understand it fully. It's a complicated business to understand. They seem to have done, they have started a similar product called Spoiled Child, which is for skincare and hair care, and that product apparently is really picking up a lot of sales and doing very well, and they're advertising their next product coming up, and they're going to have the same product, again, using that hyper personalization with data, with big data. And you can see here They claim to have $1 billion data point, and it's your classic. Because you have a lot of data points, you can make a better training, you can acquire more users, you can be more efficient, your users can be more happy, they can buy more, etc., etc. It's that's the snowball, right? The flywheel or the snowball of business, which so many modern day 21st century businesses try to put forward. If you look at their metric here, so you can see they're predicting plus 60% in revenue growth. At least that's what they've done. I've put them at 29% here because that's what I found online in some reports from October. The analysts don't seem to have an aggregate estimate for them, so I don't know what it's going to be. Obviously, if the future growth is going to be 60%, if the future revenue growth is going to be 60%, then that's a stock that's even cheaper than health, but I don't know enough to know how big it's going to be. I know that I found the 100 best innovators list. If you follow them, they're listed in the 100 best innovator list, and they've claimed to have doubled sales every year since 2018. But that doesn't mean they're doubling sales right now. That probably means that in 2018 and 2019, they did 10x and 6x or 8x. And if you average it out, it's still gonna look they're doubling sales today, even though they may not be doubling sales today, even though they may be growing at 50% today. Anyways, I put them at 29 because that's what I had found online. Quickly about their next product, and they seem to be developing a new product. Quickly about their next product, they seem to have a better system for hair loss and a better system for skin elasticity, anti-aging cream. And so we'll see. Will one of their next products have to do with skin elasticity or hair loss? I don't know. I really don't know. I understand, though, why they're going through this type of product as opposed to going through traditional healthcare, because traditional healthcare, you're going to have much bigger issues actually getting a product approved. You can see how makeup is not nearly as regulated, and you can use AI to develop better makeup right away without having to wait for the FDA approval and local authorities approval. So I understand why they're doing this. It seems to me like this is a new breed of business. This is a new type of business that uses AI to find the best product and AI to go after a new product, a new marketplace. And it seems to be like the way to go for a lot of businesses, using AI for discoveries, right? And if you've read the book, The Coming Wave, the best-selling book in AI, the author of this book, he talks about that, and he says, oh, well, you may have an AI a few years from now, and you ask the AI, hey, I want to make $1 million. Find a product that I can make, that can sell, that can make me $1 million. It's this whole idea. It seems like they're training this AI specialized in the cosmetics space that will find new products for them, and that's why they're mysterious, and they have mystery product number 3, and we don't know what it's going to be. Heavily misunderstood company, and I am the first one likely to misunderstand it. Whether I buy this stock or not will be a reason of how much time I have to actually invest and study this company. The last company in there is an all too classic story. And it's the story of interest rates. But briefly, before I tell you about the story of interest rates, I'll tell you about Inmode. So Inmode is a company that sits right in the middle between laser procedures and plastic surgery for aesthetics. So aesthetics, i.e. looking better. And you can do laser procedures, non-invasive, in office, topical procedures, easy treatments, or you can do plastic surgery, expensive, high cost, lengthy downtime, etc. And they try to be in the middle, where they have somewhat a local anesthesia or a local procedure, not that big of a deal, right? You can do this in an office without having a full surgical procedure, but still more intense than laser procedures. They are at the crossroads of both, and they're able to do fairly outstanding results. I mean, I don't know anything about plastic surgery, but if you ask me, this is their face tight product. If you ask me, that's a pretty compelling offer, right? That you can just do this in one afternoon at the office. I think it's a pretty compelling offer. It seems to be some sort of a fat. They don't call it fat. They call it lipodymal or lipo something. But it's some sort of a fat melting machine that they have, and this is what it does. And you can do it for different setups, different parts of your body. You can do it for your back, your belly, your chin, your face, etc. And they try to explain it a little bit, but of course this is not a full investment analysis, and I don't own the stock, so I haven't done my full due diligence. But a lot of it has to go with this micro needling. They have this micro needling technique where they will be able to remove some of the tissue. What's noteworthy to say from a marketing standpoint, perhaps easier to understand for me because I'm not in the medical field, but from a marketing standpoint, they've partnered with a lot of celebrities. And a lot of celebrities are endorsing the product, and they do this type of advertising billboards on giant, what seems to be a medical office building right here, advertising for their product, noting that they have the most followed person on Instagram has used their product. Kim Kardashian, I think she has something like 700 million people. And Instagram is a social media that's much more focused on beauty, that sort of stuff, than Twitter, right? A lot of us in the finance community, we use Twitter, but if you're going to be into beauty, into that sort of stuff, you're going to be on Instagram. So it's a much bigger reach, and they have the biggest influencer on Instagram using their products. Anyways, I think this is a product that's compelling. I do see some longer term issues with that. For example, I had analyzed Inmode before, and I had said, what about filters? If filters get so good, if filters on Instagram get so good, if pictures get so good, if AI gets so good, do we really need to go for a medical procedure? If you live in a digital world and you have a digital life and nobody really sees you face to face, do you really need to go for insane medical procedures? And there's pros and cons. I would argue you still need to do these medical procedures because a lot of patients that go for these procedures don't do it, quote unquote, for the gram, as the Gen Z says. They don't do it for Instagram. They do it for themselves. They do it to feel more confident, to feel better about yourself. And if you're getting cosmetic surgery to feel better about yourself, then it makes a lot of sense. My tune on this is actually changing as I study HIMSS more and more, which is we often think about aesthetics. We think aesthetics is shallow oftentimes. That's the 10,000 foot view as you would look at that. But actually, I think it's important to look at it as more of a global health thing, because obviously, if you lose your hair, how are you going to feel? How is that going to impact your psychology? To give you an example related to HIMSS. So health is much more holistic, much more integrative. It includes many more aspects than just what body health or physical health or what insurance tells you health is. It's a much more holistic matter. Anyways, enough with that tangent. The one thing I'll say about Inmode is that they've revised their guidance a few days ago, and it looks like there is some flatness in the revenue growth, but the EBITDA margin is outstanding and the gross margin is holding strong. Does this remind you of Enphase a little bit in an entirely different segment, right? Solar energy, but Enphase is a little bit of the same story. Yeah, there's a little bit of flatness in revenue growth, but the gross margin and the EBITDA margin are holding strong, and they're even guiding slightly up that gross margin. So this is a company that clearly has pricing power, and that is clearly the leader, but they're going through this decline in sales, and the main reason why, according to what I've read and what I hear, is Inmode, of course, when you sell the devices to doctors, these doctors often have to borrow money to buy these devices. And with the interest rate environments, of course, can you borrow, I don't know, $50,000 to $70,000 to buy equipment from Inmode? Can you do that? And the answer to this is you're less likely to do it because you're going to pay a much higher interest rate if you pay 8 or 9%. And so the interest rates are kind of slowing down the adoption of these products because these products are financed by doctors. And when the interest rates go down, which is my working thesis for 2024, throughout 2024, I think we're going to have an amazing decline in interest rates. Hopefully starting in March, we'll see. But when interest rates go down, I think this is a business whose sales will pick back up. So anyways, the conclusion is these beauty stocks are surprisingly cheap. And I am impressed. Especially by e.l.f. And so I might be doing a deep dive on e.l.f. going forward. But I also like Oddity, and I also like Inmode. These are impressive businesses, and I think they may be worth an investment from me. As always, this was not investment advice. This is just entertainment. I hope you were entertained. No investment advice. Please like, please subscribe, please follow me on X. Thank you for watching and have a wonderful day.